All right. Welcome, everybody. We are back to you, Leon Noble and myself, Brent Simpson from Investing Education Academy. We have a very interesting conversation for you today. We're talking about the reason why it's extremely important that you do your research before buying a stock, or do some research. And this is actually one, if you've been following us, it has come up several times. And we've had the exact discussion warning you all about what we're going to show you all today. And while Leon tells you why we chose this topic in more depth, I'm going to do a little bit of housekeeping.
Yeah, today's interesting because one of the biggest things that people in stock market investing get caught up in is hype, right? Everyone wants to be in these SPACs or these direct listing IPOs, or biotech or technology. Fads are a big thing in stock market investing. And one of the biggest ones that we've seen in the last couple years have been SPACs. Last year SPACs, and if you want to know what SPACs are, you can go inside the IEA platform under IEA TV and search in there, and you can find we did a live on SPACs. But there's a lot of hype, a lot of interest in these new ways to come public, and so a lot of money gets behind them. A lot of people say, okay, I want to follow into this new hot thing, but a lot of people don't do any research. Like, okay, so there are two tenets that Brent and IEA live by. One, there should be no person on the planet should have any investment dollars inside a savings account. That's one. Number two, and notice I said investment dollars. I didn't say.
I know. I must say I was laughing because normally you wouldn't catch yourself. So.
Yeah, no. I've learned. Yeah, investment should never have any investment dollars in a savings account. Number two is always do your research before you buy a stock. A lot of people watch us. A lot of people follow our stock picks on our podcast and inside the IEA platform. But before we do anything, we always say, look, after you read this or after you listen to this, do your own research, because people get hurt badly by just blindly following people. Like you have all these gurus online who say they can, make you $10,000 a week. Just do this and do that. Buy this option, buy this particular stock, and then it usually ends up bad. All right. So an example of that, kind of how things end badly, is like the whole GME thing. Wall Street Bets, people that were behind that.
GameStop, man.
GameStop. The ticker symbol is GME. But a lot of people, followed that, and a lot of people lost all their money. The stock went up to 480, and it just recently closed around 40 or 50. Now today it was up, I think like 100%. They got near over 100. But again, crazy volatility. People are losing money left and right. Some are making money, but some aren't. But that's an example of people that are blindly following online and podcasts, things like that. So what happened yesterday, really interesting. So we all know EVs, electric vehicles, are really, really hot. And me personally, I own Lee Auto. I forgot Lee Auto, Lee Cars. Ticker symbol is LI. I own XPeng. I think ticker symbol is XPEV.
XPEV, yeah.
Yeah, and I own Tesla. Those are my three EV stocks. Another one that a lot of people were talking about was this company called Workhorse. And we've talked about this quite a few times on the lives and on the podcast when we've been talking about EVs. And Brent and I said multiple times that we would not buy Workhorse, nor did we think it was a good idea to buy Workhorse, because Workhorse's valuation was based. We don't know this 100%, but just reading articles and doing research, a lot of their valuation was based on this notion that they were leading the charge to be awarded the contract from the United Postal Service to build the next generation postal mail delivery trucks. Right, that was like the valuation was based a lot on that. Like I saw the CEO on CNBC a few weeks ago, and he was asked about that, and being the diplomat he was saying, look, we can't talk about that, but we have great confidence in our vehicles. He's just saying the praises of their vehicle. But CNBC asked him about that because, again, this was the prevailing notion, is that they are the leading company to get that contract. And so the stock was bid up, right? A lot of stock movement was bid up on that. Well, yesterday, and Brent and I said early on, we were saying like, look, that single stock risk and that's news risk because it's based on nothing. It's based on no fundamentals, not based on any revenues, not based on sales. It's based on the rumor that they may get a contract.
And and the other thing that makes it even more insane is if you had done a little bit of research, you would have found out that Workhorse actually produces their vehicles pretty much in-house, very slowly. Like their production time is like 30% slower than the average company's production time. And when we were you all asked us this question flat out, I think in the last 2 lives, like what about specifically Workhorse? And we were like, don't get it. And so we said we wouldn't get it. We said we wouldn't get it. Let me say that. Because it's always, in the end of the day, it's your choice. And we're not, this isn't this is what we're talking about. This is the conversation where we're like, see, this is why it's important to do your research. And also, this is really why you should be part of these conversations. So if you're watching right now, this is going to be the one you want to share with a friend or share with your family members, because you should talk about this live in particular later on. There's some fundamental things about investing that just take time to hone. Certain skills that you want to immediately put in place until you reach a point where you kind of just know the market. And one of those skills is controlling your emotions. And you probably thought I was gonna say the skill was doing research. No, the skill is controlling your emotions, because honestly, you can do all the research in the world. And at the end of the day, your emotions, and for most people, is going to supersede anything intellectual. And if you can control your emotions to say no, your emotions then can inform your intellect that this is the process I need to follow. And it doesn't, we're not asking you to go do regression analysis or run Monte Carlo reports, or, we're just simply saying, spend some time, look up the financials, spend some time, just see what the company's about. Read an article or two. Don't read one, because the one you can read is biased. Read a few if you're planning on buying a stock. And so recently I heard an interview with Gary Vee. And in this interview, he said that, people see him making investments, and most of the investment decisions he makes are based on intuition. And that was actually, it was almost wrong of him saying that about his own self, because in reality, what he was truly saying was that a large driver for when he finds interest in a stock or an investment is based on intuition. And then he does about 100 hours of research before pulling the trigger. So intuition just points him in the direction. He said he's very good at just getting a feel for a company, getting feel for management, and deciding if it's a good deal or not. Like the deal for, I think it was Facebook. He got a phone call from a friend of family who said that Mark Zuckerberg's parents were selling some stock in. Do you know how he bought their stock, Leon? Did you hear the story?
No, it's news to me. Huh.
So he actually got a phone call from a high school friend that Mark Zuckerberg's parents were trying to get rid of some of their stock before the IPO because they just needed some cash to buy a house. And before they hung up the phone, he said he wired them the money. It was like 150,000, and that made him basically, he got him to the point where he's a multi-millionaire, and he started all these other investments based off that, like pretty much one move. And so, in that space, he had already done the research. So where you might be like, oh, he got a phone call from somebody and he said, oh, let's buy the stock, and he did it. Most real investors do some level of research. Now, what yours is kind of for you to decide. Leon and I, we do research differently. But one thing we do the same is we don't let emotion carry us into a stock purchase. And we're talking about Workhorse today, but again, this is that conversation that's extremely important, but it seems overly simple. Like, okay, why you all keep talking about emotions, and why are you talking about doing research? We all know that. Yes, but when GameStop all of a sudden started shooting through the roof and everybody said, okay, let me get in at $347 a share, and you saw that thing plummet, it's like, oh my gosh, what do I do? Do I stay in? Do I get out? What drove you in? Greed. Greed is an emotion. Greed and fear are two drivers that dominate the stock ecosystem for investors. So if we can today show you a live example of what happens where greed or fear drive you to not be either excluded or you just want to get in before it goes to the moon. It happened with Bitcoin years ago. We all know what happened. Bitcoin, it ran up to 20,000 and then corrected back to, I think it was 338.
Like 3, it dropped 80%. It was like 3,000.
Yeah, $3,800. Imagine going from 20,000 to $3,800. Could you control your emotions in that situation? Because intellect would tell you that it was eventually going to continue to grow, but nobody knew how. It's cryptocurrency. It's very new. Some of our members are new to investing, and the information we're sharing with you today seems overly basic. And you may be thinking like, okay, you're beating a dead horse. You said it enough. We get it, but we can't say it enough because we have 90 plus members, or we're hitting that 90 mark inside of the IEA members community, and we get the stories. We hear the background about what's driving people to make these investments. And also, I'll say this, and this actually makes me super proud, for Leon and I. Some of the members that I know probably would have bought Workhorse didn't because of the conversations we were having in the platform. And that makes me feel great. And I will say at what we're about to show you, there's a decision to make at this point. Like, where would you go from here? So I'm gonna bring up slide 1, and then we're going to talk about it.
Yeah. So the reason we're talking about Workhorse is because Workhorse had a horrific day yesterday. So inside the IA platform, posted this yesterday, and typically stuff we do inside the platform we don't share publicly just because out of respect for our members. But this was such a tangible, like real time example of one of our pillars of doing your research before you buy stock. Like we couldn't really hold this one back, right? So we brought this one out. And so what we have on the screen here is a chart of Workhorse's stock. And there's an arrow pointing to its percentage gain or loss that happened yesterday. Workhorse yesterday was down 47.46% in one day. So the person who bought Workhorse the day before lost 50%. And actually, this has gone down more because today it was down another 8%.
And so real quick, for everybody listening to the podcast right now, what we have up is a chart of Workhorse as of the close of business on February 23rd, 2021. And it shows the close price at this time was $16.46. That meant that it was down 47.46%, which equals losing roughly, actually, it's not even roughly, actually $14.88 per share on that day.
Essentially, 47%. So roughly 50% of your money, if you invested in Workhorse the day before, was gone. Remember, this was in one day. This isn't like over time. Workhorse dropped 47.46% yesterday, and the reason it did is because they were not awarded the contract by the United States Postal Service. It was awarded to. It's funny. The name is Oshkosh.
Yeah.
I thought it was a joke at first when I saw it. I was thinking Oshkosh like the overalls. But it's a company called Oshkosh Defense. They won the contract. Workhorse did not win the contract, and the stock absolutely plummeted. Roughly 50% was 50% loss yesterday, and today it was down another 8%. So, and here's the thing: 2 weeks ago, Workhorse was trading at $40. Today it's trading at $15. It's lost over 60% in 2 weeks, and 50% just yesterday. Reason being is because that rumor that was out that it's a leading candidate for this contract turned out not to be true. The risk Brent and I had spoke about, the reason why we said we personally would not buy Workhorse became a reality. It was single stock risk, it was news risk, and it was all rumor driven. And because Brent and I had done the research, put in the work, we were like, nah, we're good. We'll do Tesla, we'll do Lee, we'll do Xpeng, but Workhorse. And the reason we do those companies because those companies are actually selling real world products. Right, like I know Lee and Xpeng, their revenues were up, I don't know, 200-300% quarter over quarter, quarter over quarter, year over year, at their last earnings report. So they're selling actual product, real world product. Workhorse, I don't know if they're like Brent said, their production is crazy slow. I don't know if they've even sold one van yet. And again, their valuation was based on them winning this contract that did not happen. and the stock is down 62% in 2 weeks and 50% in 1 day. So, so this is the reason why we stress. Do your research before you buy stock. EV is one of the hottest sectors out there. A lot of people piling into it.
You keep talking about these acronyms: electric vehicle marketplace.
Electric vehicle marketplace. Yes, thank you. The acronym nerd. But the electric vehicle marketplace is hot. A lot of people are buying into it. Brent and I bought into it by the different stocks we own. But again, we did our research and we're comfortable owning the stocks that we own. I mean, and for instance, I know Lee and Xpeng are volatile, right? They move anywhere from 8 to 10% per day, right? But we're comfortable with that. We know going in, we know going for the long term, and we're okay with that. There isn't that, huh? Yeah, Tesla moves like
Tesla can move $150 in 1 day.
Yeah, Tesla. I mean, Tesla can on a really big day, Tesla can move over $100. It moves on average, I think Austin saying around $8 to $10 per day. But for Tesla, that equals like a couple $100. So so once we got into those stocks, we were cool with it. Like we're good. We sized our position enough, and we're comfortable in those stocks. And again, those stocks are actually producing real revenue, whereas Workhorse, their whole and their valuation was based on their revenue. Workhorse's valuation was based on a rumor of winning a contract that did not happen.
And, let me jump in real quick. So the reason this is important, why we're bringing this home right now, we are in a market environment that has valuations that are through the roof, and it really doesn't make sense for some of these companies. And a reckoning will come at some point. It will come, and some of these companies that are, really high valuations and no revenue, a correction is going to happen. And if you're picking stocks based off of just pure popularity, and I know, you all have heard me say the stock market is nothing but a popularity contest. I still agree that it is, but you also have to know when it's false popularity. And so if you know somebody is the wrong reasons why everybody thinks this person is so great, then you kind of move on that news. If you can look at this as an example of what not to do in the future, we won today. Like, we've accomplished our goal. We helped you realize that you can't just go off emotion. And also, looking at the Workhorse ecosystem is electronic vehicles. Leon and I did cover the marketplace in regards to buying a number of electric vehicle companies, but we didn't buy this one. And I'll tell you what, at a 50% loss, I might buy it now. And I'm still not, if I buy it now, I'm not buying it thinking it's a great company. I do not think it's a great company. And I'm only going to use, this is like borderline risk capital, curious money. Like, it's right on that cusp, because I'm just buying it with, and Leon and I had this debate earlier. I think somebody's probably going to come along and buy them out, but they really don't have anything to buy out. Let me be very clear. They have a couple buildings, which I think they lease. They have no large scale manufacturing plant, and most of their vehicles aren't like pushing the envelope with technology. So actually, now that I'm saying it out loud, I probably wouldn't buy it, but I still think it's some room for a comeback. But as a long-term play, this is an ideal situation where you're looking at opportunity cost. If I buy this, what other stock am I not buying? And I don't know if this stock is strong enough to take me away from even one of the stock picks that we're going to tell to you all in just a short period of time. I would probably pick the pick that we're going to talk about later over this, but nope, I wouldn't buy this. I wouldn't. I put money in cryptocurrency before I did this. And,
so what you said about a reckoning, the reckoning kind of happened yesterday. So because so a lot of people are thinking right now, okay, everyone's waiting for this crash, right? Because we're near all-time highs, and we just came off one in March. But what other people are saying is that there'll probably be pockets of crashes. So the entire market may not crash. You may get sectors that crash. One that got torched yesterday was SPACs. I mean, SPAC is a sector, but SPACs, companies that have come out as SPACs. And because remember, SPACs are just highly speculative. They come out as shell companies until they merge with an established, usually startup. Well, SPACs got ripped yesterday. And a lot of their valuations were through the roof, again, on a lot of speculation of who they're going to maybe merge with or the sector they're going to go into. And a lot of those haven't come to fruition. A lot of them are just still sitting out there as shell companies. So there was a mini crash yesterday in the SPAC arena of investing. Will it last? I don't know. Some of them came back today, some of them didn't. But Workhorse has not come back. It was down another 8% today. And again, based on a rumor that did not happen, single stock risk, news headline risk. That's why we did not buy this stock regarding electronic vehicles or EVs.
Yeah. So as you all go out in time and space, look at the fundamentals, right? What does their revenue look like? What does management look like? I'm a huge proponent of management. What does their finances look like year over year, quarter over quarter for, I would say, at least 3 years? Some of these companies are new, and there's one in particular, which was a SPAC that Leon and I both liked a lot, and that's DraftKings. Gambling, alcohol, it's other things that just they probably will never lose their popularity, so they're always going to be popular. But as an overall market, you want to look at something. Don't listen to us and go, you know what, I'm gonna go buy it. Listen to us and get inspired to go do research. If you're listening to any of the other platforms that speak about stocks, let them inspire you to do a little bit of digging. Don't let them inspire you to open up your brokerage account and just make the buy, because it's moving. And I'm gonna tell you, many of these news medias outlets, they're pay-to-play platforms. Not all, and I'm not naming any names. I'm just simply saying some of the news media, some of the news outlets are pay-to-play platforms. What does that mean? That means that if a company pays enough, they can actually get the headline, or they can get the center, the cover story, or the centerfold story. I don't know what you call it. I think the cover story is in the center of the magazine, but you don't know that. We don't know which ones are pay to play and which ones aren't. Also, there still is market manipulation in the world. Believe it or not, shocker, right? There are people that get articles placed because they want to either short the stock or run it up. And again, we don't know if we look at just one article one time and then make a snap decision, it could be one that costs us to have a 50% loss in one day.
Yep, and that's why we always say, and that's why, like I said before, I think it was either the last live or the one before that podcast. I would say I don't read opinion pieces, right? So if I'm doing research and I see that it's, I'll read an article, but if I see,
I think that's a great point. Can you explain what you mean by that? Because not everybody knows what an opinion piece is. And this, for everybody who's listening to the podcast or watching this live right now, please listen to Leon explain why he doesn't listen or read opinion pieces, because I think it's a great point.
And yeah, so what I mean by opinion pieces is I'll be reading an article, and I don't know if it's an opinion piece or not before I start reading it. So I'm reading an article, and if I notice that the author is injecting a lot of their own opinions or a lot of hearsay, rumors, or things that just aren't facts, right? If I'm seeing a lot of that throughout the article, I will then say, okay, this is clearly an opinion piece, and I move on to the next one. So opinion pieces don't have a flashing red sign saying opinion. It's just when you read through the article, you can get a feel for what the author's bias is. And some articles, like I know Seeking Alpha is one, where at the end of each article, they'll actually explicitly say if they either own shares in the company or not. So I like that about Seeking Alpha. But like Brent said, a lot of these are pay to play and they don't do that. So if I see a lot of opinion and not a lot of facts about a company, I'll read through it, digest it and move on. But when I start to see that really opinion piece, I kind of discount it, because again, that's someone's opinion. It's not fact. They don't have any more information than I do. And that's why, like we would say, go to like something like Yahoo Finance, where you can go through balance sheets, you can go through cash flows, you can go through and like you said, research is hard. We get it. And I say the two, if you're gonna look for the two, primarily just look for revenue growth and earnings or profits growth over the last 3 to 5 years. That's relatively easy to find. It doesn't take a lot of digging. To me, those are the top two. If you're not trying to dig too much, you can find it on Yahoo Finance. It's free. It's out there, and it's not hard to do. So, but yeah, opinion pieces. When you start to see people's opinion coming too much into an article, I click off.
All right, and so we owe you all 2 stock picks, but also we wanted, before we give the 2 stock picks, we want to let you know there is a lot of change happening inside of Investing Education Academy. We have some stuff I'm not going to tell you about, some stuff I am going to tell you about. We have some new sections inside of our membership platform where we're actually digging deep into cryptocurrency. Leon and I both have had extreme success in cryptocurrency marketplace over the last 4 months. And we've started to do more research, because we're not just blindly just out there like, oh, there's a crypto, let's get it. There's crypto, let's get it. It's the world of cryptocurrency is changing, and I'm trying not to go too deep in it, but if you understand the processing behind cryptocurrencies and you also understand what some of these coins represent, it helps you understand the technology or the platform that's sitting on top of it or why they created the coin. And it's a lot of opportunities, a lot of opportunities. This is a infantile industry. So we created a group inside Investing in Education Academy. If you're already a member, when you go into the membership platform where it says tribes, you can actually click the click the tribes to get a drop down menu, and or is it in the topics?
No, so there's two. So there's one. So there's a the tribe we have created, that's for insiders and Panthers, because that's where we do a lot deeper dive in actual some research into cryptocurrency. Then we have the IAA. So that one's called IA Pro, IA Crypto Pro. Then we have IA Crypto. That's a topic that everyone can see on the platform. And then we'll have a lot more. We'll still have a lot of information there. It'll be a little more general. Won't be as deep as research. But so we have two. One for IA insiders and Panthers, then one for the entire platform.
Yeah, I mean, and right now crypto is currency. I think probably today I made 50% on crypto, and that's today. So it's the opposite of this.
Right. Right.
I just blew. That was funny. But anyway, there's a lot of movement, and again, you all wonder why in the heck do we do this every Wednesday at 9? It's not to really gain membership every Wednesday. I mean, honestly, anybody who listens to the information we give, you can actually make decisions or change the way you invest off the information that's being given to you, because we just want to change the ecosystem for just whoever's willing to listen. Whoever says, you know what, I'm gonna take some of this information and share it, or I'm gonna take it and actually do something to change my life. In 10 years, when some of our members are in a very different place, and some of the people who watched and they kind of did their own thing, or watched and did nothing, there may be some very serious regret. Right now, we have it listed at, I think our lowest membership is $200 for the year, the entire year. And then we have a membership that's $500, which is our insider membership, that's $500 for the year. And then we have Portfolio Panthers, which that's $5,000 for the entire year. We do a lot of investing together. We own parts of companies together. We bought land internationally together. And we're probably going to do more acquisitions as time goes on. And then we have the insiders. The thing that's really cool about the insiders is we're about to start showing you all our actual investing, our account. We're just going to show you our account. We're going to provide a report to the insiders. And for the Panthers, you'll actually get to see snapshots of our accounts and see what's going where and why. So these are just two of the things that are coming to IEA that we were planning, but we didn't know when it would happen, and is now. And another piece Leon and I are trying to figure out is how to get more conversations, like live conversations happening around the market with the insiders, just so we can have a broader kind of general mastermind about what's going on, who's doing what's working. Because we had a hot seat, which we have a member sit in the hot seat and actually show us their portfolio normally it's the first Saturday of the month. It was late because of the Super Bowl and Valentine's Day. Long story short, this client who's only been investing for, I'm gonna do this, 4 months, 4 months, had stocks in their portfolio that were over 85% rate of return. And they didn't start investing until they met us, which is awesome. And it made me feel very good inside. And that's gonna be something that's gonna change that person's life. Not only that, they had at least 3 other stocks that were above 30% rate of return. And again, 4 months, and their overall portfolio was positive. So it was a delight to see. But some of the stocks I never even heard about. And I went back.
What I loved about that is it was tangible example of someone listening to when we say sectors are important. She had 2 or 3 stocks from the solar industry. And we always say, solar's number 1, tech is number 2. She had 2 or 3 stocks that were north of 40% because she had followed that information, invested in the solar industry. So it was really great to see that, like I said, in 4 months, she had stocks that were 85%, many that were over 40%. I think she only had 1 stock that was down in her portfolio of, I don't know,
3 stocks.
It was 3, okay, 3 in a portfolio that was of what, like 15, 20 stocks?
22 stocks.
Yeah, 22 stocks. Yeah. So I mean, great return. Right? She had a massive return in 4 months. So it was great to see.
Yeah, and so we do these every month where you get to like look into the crystal ball of somebody else's head and get to actually physically see the stocks they own and the returns they're getting. I don't know too many places where you can get that. And just getting those, oh my gosh, that's a great stock moments. One stock in there can literally be the difference between you taking a loan out for a kid's car or paying for it in cash, depending on how much you invest. And so, I'm just really urging you all. And Leon and I say this too all the time. I don't really care if it's us or anybody else. As long as they're legitimate and they're giving you good information, you really don't want to go it alone. You don't. I've learned things, just talking to Leon, like, oh, you know what? Yeah, I'm gonna look at that a little deeper as a result of the conversation. We've been friends since we were 9 years old, and I'm still learning things just by having ongoing conversations about the market. Who are you talking to about the market? How often are you talking to them? A portfolio, we've made millionaires, and there are people who in that millionaire space, we can still do more. There's still more to be had. It's not like, oh, it's a million, let's just get relaxed. You still want to reallocate. You still want to look at your positioning. You want to make sure you have a balanced portfolio if that's how you invest. So, these things are all important. So with that being said, Leon, anything you want to say before I jump into the stock picks?
Nah, just everyone now that's watching and listening knows of a stock that went down 50% in one day. It can happen on stocks that are on shaky foundations, that are based on rumors. That's why we say always do your research.
Yeah. And for anybody who's trying to find us on Clubhouse after this live, we probably will not be on Clubhouse today, simply because I'm at the office and I realized I left my Apple device at home. And so
you upgrade the iPhone all the way around, buddy.
Never Android. So my stock pick today is actually an ETF. Let's see. The ticker symbol is MJ. It's ETF MG Alternative Harvest ETF. And so in the space right now, anybody knows that there's a bill right now, I think it's in the House, for possible federal legalization of marijuana. The industry is huge. And I don't know which one's going to be the front runner. And there's still a lot of junk companies inside of the marijuana space. This is the truth. So with this ETF, you kind of cover the market. Let me take a look at the profile. All right. To the style box. So this investment seeks results that before fees and expenses correspond generally, not that. Oh, well, this is a collection of marijuana stocks on the market. I don't see an actual description. I was hoping to read you a description. Year to date, the total return that they have listed is 62.49%. That's insane. And
that's in a month and a half.
And it looks like right now they're trading at $24.28, up $1.02, which is equal to 4.39. One of the things I like about this particular ETF is the fact that, number one, it covers industry, right? And the industry is very new, very new, very, very, very new. And legislation is in the works that could be favorable. Now, let me be very clear. What does this do that's similar to Workhorse? This recreates a governmental risk or legislative risk. If the legislation isn't in favor of the marijuana industry, I don't think it will hurt this ETF that much, personally, because again, it's covering the sector. The sector is still going to continue to grow. It's just, it might grow slower than it would if the legislation is favorable to the marijuana space, which we won't know till it really happens. You've heard us talk about small cap, large caps. This company has $1.4 billion in assets. Some of these marijuana companies that are trading what's called pink sheets or OTC, which is over the counter. Those are the super volatile, normally penny stocks or stocks that are trading less than $5. They can go away within a day or two. I don't like those stocks personally. When you look at MJ. It's an ETF that's covering the marijuana space, and that gives it no single stock risk, which is very different from a workhorse. So that is my pick for today. If you are looking for it, its ticker symbol is MJ, ETF MG Alternative Harvest ETF. It's a very long name. Just look for the ticker symbol. It's MJ.
All right, and my pick is Thermo Fisher Scientific, ticker symbol TMO. So I'm just going to read you what they do. So they provide scientific instrumentation, reagents, consumables, and software and services to the healthcare, life sciences, and other laboratories in academia, government, and industries, including biotech and pharmaceuticals. So essentially, they support life sciences, biotech, pharmaceuticals. They support the healthcare industry, right? They're kind of like the quote unquote picks and shovels that a lot of these pharmaceuticals and biotechs use to actually make these drugs. Massive company. Last year they had $32 billion in revenue. Over the last 3 years, they've grown revenue 16%, and they've grown profits 43% on average the last 3 years. And I was to say, growth companies by Wall Street standards grow their profits 20-25%. So this company is doing double that at 43% profits have grown over the last 3 years on average. So highly profitable.
Yo, this
Last point,
$180 billion market cap.
Yeah, oh, it's huge. Yeah, they're huge. $180 billion market. Yep. Last point is the point I love is that they just raised their dividend by 18%. And they actually pay their dividend out of profits, not out of a loan like a lot of these companies. And when you're growing profits at 43% on average per year, and you have $32 billion of revenue, raising your dividend isn't a problem. And when a company raises their dividend, that really shows they're really in strong financial shape, because again, dividends come out of profits. So if they're willing to raise that dividend 18%, they know that their profits are very strong. They're on sound footing. So again, the pick is Thermo Fisher Scientific, ticker symbol TMO.
Yeah, and also too, another piece to just remember when you're looking at companies with dividends in general, when COVID environment hits, those companies are the last really affected because they can always adjust the dividend, where some companies, that's it. Like they were already on loans. Now they have to take additional loans. The hole is too deep to dig out of. So when companies have dividends, it gives them the flexibility to adjust the dividend, which can be hundreds of thousands or millions of dollars, to allow them to stay afloat. So it's a really great cushion. In addition to that, is whenever you have that dividend, that's plus what you're earning on top of the appreciation of the actual stock, assuming that it has positive return.
Yeah, and the point about the dividends, a lot of companies actually cut or eliminate their dividends during COVID. When COVID started last March, a lot of companies, a lot of the industries, airlines, cruise ships, a lot of companies just cut their dividends or eliminated them altogether because they couldn't afford to pay it out of their profits because revenues were down so big. Well, here's a company that's actually raising their dividend by 18% as we're still in COVID. So, again, shows the strength of the company.
Yep. So the two picks today is Thermo Fisher Scientific, ticker symbol is TMO, and the ETF MJ. Now it is a long name, so let me go back to it. Is ETF MG Alternative Harvest ETF. Easier said, ticker symbol MJ. If you all have any questions about this, again, we will not be on Clubhouse today. Sorry, things happen. But we will be back on our live next Wednesday. Share the information with a friend. If you are interested in listening to the podcast, it is www.ieapodcast.com. If you would like to become a member, you can go to www.ieamembers.com. And we have additional changes coming very soon. You will see them and hear about them. I'm definitely excited that, the growth is happening, and we're hitting that 90 mark with members. So hundreds right around the corner. Talk to you all soon.